Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. Each time asking ourselves what happened today, what does it tell us about the coming ones? I do this show 4 times a week every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel LA Little. If you want to subscribe, reach up in the right hand corner, do so anytime I push content that's not private. For members only, you'll get a notification. As far as what happened today, let's take a look at the numbers. We had a slight pullback, but once again, you know, if you look at the charts, which we'll do here in a second, you're going to see that they didn't want to give it up. So we had a small pullback. The Russell down the biggest. Of course, the Russell has been up the strongest, but volume disappears on the Russell on the way back. NDX, NASDAQ, all of those down. Not that much. Same thing on the S&P. Less than 0.2% by the end of the day. If you look overseas, DAX got hit pretty hard, down 1.25%. We actually had the Nikkei down again, 0.8. And across the board, what was interesting is the dollar was up almost 0.5%, yet gold and silver both up as well as natural gas. And the oil market actually pulled back today, 1.5%. Bonds up big, bonds going back to test the highs. If we look at the indexes themselves, so if we turn our attention to the S&P 500, what you're going to see is the same sort of thing we've seen before. If you go back and you look at last week when this market gapped down and then would hold each day and push back up, you saw the same sort of behavior today. Again, this market telling you it's stronger than you think and doesn't want to come back in. Over a swing point high, holding over it. Looks to me like this still wants to try and climb higher. If we look at it on the weekly, now the weekly, you know, we only got a day left. On the weekly, you're about to break a swing point high here. That's going to be a breakout there, and you're going after this one now. And beyond that, all you have is the two at the top. So S&P very close to some sort of a breakout. You've got this huge ABCD structure in place now. And this is a monster ABCD structure if in fact it actually gets going and completes. And so at this point, this market is pressing and pressing. Nobody thinks it can do it, yet it keeps doing it. NASDAQ, broad composite. NASDAQ actually ends down, but again, a little bit of a doji. Not much volume on the way back. NDX, which has been the laggard, again today struggled, but then again pushed back up just like the others. And finally, if we look at the Russell, now the Russell pulls back, doesn't test the top, pulls back, has less volume. The Russell's going to flip right around and try to go back up again. So if you're looking at the U.S. markets, they're all telling you they want to trade higher. The problem is overseas. If we go look at the world markets, so if we bring up the world markets, in particular if we look at the German market, the Swiss market, those markets are telling us that they're going to try to trade lower. Here on the German market, you see volume expanding, right, and price coming down. And not only is it coming down, it's coming back into this bar and it's coming back with more volume. That's not a good thing. Now, this is a wide price spread bar. It doesn't have high volume. So as you're coming back into it, the key always is, can you get into it and stay into it today? They test into it, but they can't stay, but they hit the volume. That tells me they're going to come back and do it again. They're going to try again. They're going to try to get into this bar, and I suspect this little green area that you see here on the chart, which is a support zone, green is support, red is resistance. I suspect it's going to try to get into that level probably tomorrow. If we look over to CAX before we go to the Swiss market, CAX does the same sort of thing, already into the bar, didn't have the volume expansion there. But if we go over to the Swiss market, and this is all currency related, folks, that's what's happening here is currencies. Swiss market's back into its wide price spread bar and has a little bit of a volume pickup comparatively, and it's now under this bar. That's an ABCD structure to the downside. And so when you look at this and you look at the top, you draw it down. We got, yeah, the ABC, the A, the B point is there. There's your C point. That projects down to about that area, which is down at these lows. That looks to me to be where this is targeting. So if Europe's going down, that means the dollar is probably pressing higher because the dollar, actually it's true, the dollar would be pressing higher, or has been pressing higher today the European zone, the euro was actually down, but typically it's the other way around. So it's a bit of an anomaly today that they had as much pressure as they did, because we didn't see that pressure on the dollar today. And what was kind of odd is the dollar was up, yet we saw pressure there. We saw some pressure overseas in the Asian markets, and we saw gold and silver continue higher. I'm not sure what that tells us. That's not normally the correlation that you would see. Looking elsewhere, I want to quickly turn your attention to the sectors, because I think the sectors are telling us something. If we look at the healthcare has a breakout, and we're going to see this in a number of these charts. Healthcare has the breakout already, right? And it's actually on multiple swing points on multiple time frames. It's holding that breakout zone. This is going to try to shoot higher. What's holding it back is the IBB, which is the biotechs. Elsewhere in here, the consumer discretionary has been one of the weaker groups. It's still holding, but it's a long way from its high. And if we keep flipping back through these, the safety sectors are starting to get a good bid. Today you saw the utility sector take off. Utilities actually broke out on multiple time frames last week. That typically says you're going to try to trade higher. It broke this one, it broke that one, it broke this one over here. It broke 3 of them on this time frame, and also broke on the weekly time frame. If you pull it back and look at the weekly, you've got a breakout there. That's the red arrow. Multiple time frame breakouts typically have 2 to 3 bars extension on the longest time frame, in this case the weekly. So you should expect this to continue higher. Not a bad place to be putting some money. If you look at the XLP, which is another safety sector, now these things have had some wild swings, but it's wild swing back to the top side now, right? You're doing the big move down, and now back up and breaking out. If you look farther down the pipeline here, XLK has been weaker, hasn't been able to break out, but today holds and looks like it's going to try to. Industrial complex trying to break out. It's up at the highs. Tried to pull back today, wouldn't give it up, back at the highs. XLF financials, they're one of the weaker spots. So you got consumer discretionary and financials. Those two amount to about 40% of the S&P, close to it, about 30 something. And that's a big drag, those two, when they don't move. Energy sector still holding. XLB also holding. The SOX was trying to pull back today. This thing's extended, yet it won't give it up either. Turned around and reversed higher. And the IYT, which is the transports, also a little hammer reversal by the end of the day. One other thing is the ITB. This one looks like it's trying to break out as well. And finally, if we go to the IBB, this was the one that was weak and holding the healthcare sector back. And so when you look across the board, you've got decent strength in most of these sectors, but you've got a couple of the key sectors not participating. And what that says is, even if this S&P is going to continue grinding, it's going to have a hard time getting higher unless you start getting that rotation into those groups, and in particular into the technology group, which has been the laggard. Tomorrow, it's going to be kind of a quiet day. There is some industrial production numbers that may make the markets move. But outside of that, it's just the weekend again, and you have the Fed next week. This market is just grinding higher into the Fed. It's going to get up there and try to be positioned to break over the highs with respect to the S&P when the Fed reports whatever they're going to do next Wednesday. Tomorrow, I expect the same thing we've been seeing. This market's going to try and turn and go higher. It's going to come off weakness probably in the morning off of Europe. Expect the buyers to show back up, though. That's it for tonight. Have a great one. Have a great weekend. I'll see you Sunday night. Take care. Good night.